Welcome to today's lecture on festivities. Let's celebrate. It seems that all the shops are getting ready for Christmas, even though Halloween has hardly gone, and we've yet to celebrate Guy Fawkes. How to celebrate? Many employers celebrate festive dates with employees, such as Christmas, Diwali or Eid, and many others. And what do those employees need to know? What they really want to know is what will be taxable, what they could do that would be tax-free. If it is taxable, who's going to pay the tax? And is there going to be any national insurance to pay? Whether what the employer does to celebrate a festive event, it could be a party or a gift, it's really important for us to know whether they're going to be taxable or not. If the party or the gift is taxable, then what will follow the event or the receipt of the gift is a P11D form to the employee and a tax bill to the employee. It is quite likely the employee is not going to be quite so keen on going to the party or receiving a gift if they know they're going to be paying tax. If the employer has to tax the gift or the party, then the employee will pay tax through their PAYE, through their salary, because their tax code will be amended. If the event or the gift has to go on the P11D, the employer will pay Class 1A national insurance at 13.8% on the benefit cost. That will be reported, as I'm sure you'll remember, on a P11DB form. Where the employer doesn't want the employee to suffer the tax bill, they can put the benefit into what's called a PAYE settlement agreement, a PSA, and some of you may be familiar with those. What happens with a PSA is that the employer will pay the tax and will pay the national insurance, and there's no tax liability on the employee. In order to work out the cost, the employer has to gross up the benefit using the employee's tax rate, 20, 40 or 45%, and that tax figure will be paid by the employer. And in addition, the employer has to pay Class 1B national insurance on the grossed up benefit. So that's the cost of providing the benefit plus the tax. And that national insurance is calculated at 13.8%. So how does the employee find out whether or not there are any tax-free items that can be given to an employee? Like a lot of other things, we all know that tax has to be paid. When we're celebrating Christmas or a similar festival, it would be nice to give our employees something that is not going to be taxable. So it's good news for employers. There are some gifts and some functions that we can give employees which will be tax-free, but only, of course, if they fit the rules set down by the revenue. And there are two rules we can look at. One is, what is the event? If it's an annual social function, then that will not be taxable. And if the benefit or the gift we're going to give to the employee is trivial, again, that will not be taxable. But if our event or the benefit doesn't fit either of those categories, it's going to be taxable in the hands of the employee. Let's have a look at the annual social function exemption. This is under Section 264 of ITPA, the Income Tax Earnings and Pensions Act 2003. And if you look at this, or you look at the Revenue's 480 Guide on Benefits, you'll see that there is an exemption from tax for an annual social function. So an annual social function is an annual party or parties that an employer gives to employees on an annual basis regularly. So this could be a Christmas event, a Diwali event, a summer barbecue, it could be a Halloween party, and it happens every year. In addition, the event must be available to all employees or available to all employees at one location. So if your business has two locations, one in London and one down in Brighton, it could be you have two events, but the events are available to all employees to attend. One note of warning, though, is that if the employer decides to put on a directors only event, that will not qualify for the exemption, because obviously all employees are not going to be invited. It's a directors only event, and that would be taxable in the hands of the directors. So as I said, an annual event means that these events happen every year on a recurring basis. The summer barbecue, the Christmas party, a Diwali event, an Eid event, but it's something that the employer does regularly every year. A one-off event, therefore, will not qualify for exemption. So if the employer wanted to celebrate 25 years of being in business, or celebrating a new contract, or celebrating a merger with a new business, that will be a one-off event and that will not qualify for exemption. So for anyone attending, there will be a tax consequence. The other important factor about using this social function exemption is that the cost of all events cannot exceed £150 per person attending. If the cost is over £150, you would need to calculate the cost of each event to see which is taxable. So I said the cost of the function must be less than £150 per head attending. That cost will include a number of things. VAT, even though you may have reclaimed your VAT through your tax returns. Then you need to look at the event as a whole. So maybe the employer is generous and provides a free bar. They then pay for dinner and entertainment at the dinner. That might be a band, it might be a musician. There might be gifts given out at the event. There may be a free bar after the event. There may be transport to and from the event. And in some cases, overnight accommodation may be provided. So the total cost of the event must be added up and then divided by the number of people attending. Then you'll get your price per head. So let's have a look at an example where this employer has two functions, and they do this every year. It's a Christmas party and a summer barbecue. So we calculate the cost of the first event, the Christmas party. It's £100 per head attending, including VAT. The second, the barbecue, costs £45. So the two together come to £145 per person attending, and that means both fall within the annual parties exemption because they're below £150, and so no tax is payable. And in the second example, an employer has again two annual functions, Diwali and the summer barbecue. The Diwali event costs £130 and the barbecue costs £50. So in this case, we've got a total cost of £180. What we cannot do is take away the £150 exemption, leaving just £30 to be taxable. What we must do is look at the two events, apply the exemption to the high costing event, so the £130 event will go within the £150 tax free, but the second event, which is £50, is taxable because that's taken over as the £150. So the employee's P11D will show £50 as a taxable benefit, and that will go under section M. If they took a partner with them, then the figure on their P11D will be £100, £50 for both of them. Looking at another example, let's say we have an employee with two functions, Diwali and the summer barbecue, and in this case the Diwali event costs £140 and the second costs £80. Again, we're going over the £150, so the first event, the one that cost £140, we would apply the tax-free limit of £150 to it, so there would be no taxable benefit, and that would leave the £80, which has pushed us over the limit, as being taxable, and that would go on the P11Ds. But supposing we have some employees who attend all events, and some employees that attend Diwali, and some that attend just the barbecue. How will they be taxed? Maybe not quite as obvious as it seems. If the employees attended both events, they will be taxed on the £80 for summer barbecue, and if they went with a partner, the taxable benefit will be £160. If an employee attended only the Diwali event, because the Diwali event falls within the £150 limit, there'll be no taxable benefit. But if the employee attended only the summer barbecue, because the Diwali event has picked up and taken the £150 exemption, they will be taxed on the £80 or £160 if they took a partner. When we're looking at the taxable party, the regular events, the 2 or 3 events you have a year, it might be possible for the event that takes us over the £150 limit depending on the size or how much it takes us over the limit, that extra cost could be treated like a trivial benefit. And remember, we've looked at trivial benefits before, and a benefit is considered trivial if it costs the employer £50 or less to provide, including VAT. It is not cash or a voucher exchangeable for cash. It's not a reward for services, employment or performance, and it's not in the contract of employment. And certainly annual functions, our Christmas party, Diwali, etc., will not generally be in our contracts of employment. So looking at an example where we've got an employer with 2 annual functions, the Diwali costs £130, and in this case the summer barbecue costs £45. The larger event, the Diwali, £130, can be absorbed within the £150 exemption, so it's going to be tax-free. But the barbecue takes us over the £150, so the barbecue at £45 is going to be taxable. But as it's an event and it costs less than £50, the employer could consider that to be a trivial benefit, and so it's not taxable because it becomes within that trivial benefit exemption. And here I'm just looking at some other examples where the trivial exemption could apply, relating to festive gifts. So supposing instead of doing a party, we just provide employees with a gift. And let's say that gift is a hamper that costs £45, or maybe a turkey costing £45. Both of those could be considered a trivial benefit individually, but not if the employee received both. But if an employee received a hamper of £45, that's a trivial benefit, not taxable. If another employee opted for the turkey instead of the hamper, then the turkey wouldn't be a taxable benefit. But for the employee who opted to have both, if that was an option, then they would have a gift of £90 and both would be taxable. Maybe the employer decides to give store vouchers, Marks and Spencer's, Sainsbury's, Harrods, whoever. If the voucher that's provided to the employee costs £55, that's not going to be trivial because it exceeds the 50, so that's going to be taxable and will go on the P11D. And there will be a Class 1 payroll national insurance to consider. If the store voucher cost £30, that is within the trivial exemption of £50 and so would be tax-free. Another example might be we're not doing Christmas parties this year, but we're going to give you some wine. So let's say the employer spends £30 on a bottle of wine for each member of staff and £75 a bottle for directors. So for the staff, because the cost of a bottle for each member of staff is less than the £50, that would fall within the trivial exemption, under £50. But for the directors, because the cost of the bottle of wine for each director is more than £75, that will be taxable on the P11D at the full £75. And Class 1A will be payable by the employer. So, in summary, it is possible to provide employees with festive celebratory events, providing these events are regular annual social functions, and in total, the events do not cost more than £150 per head attending, including VAT. If the total cost of those regular social events does exceed £150, it is the event that takes the total over the £150 that is taxable, even though the first event might not have absorbed all the £150. It is worth considering whether the excess over the £150 could be considered a trivial benefit because the cost of it is less than £50. So in the examples above, where the summer barbecue was £45, that would be a trivial benefit and wouldn't need to be included in your regular annual social events total. Do remember though that one-off events or director-only events do not fall under the annual social events exemption. And finally, it's worth reviewing any PSA that you have, PAY settlement agreement, to see whether your one-off events or the taxable social events could be included in that, and the tax and national insurance paid by the employer rather than the employee. So I hope you enjoy your festivities and have a great celebration. Thank you for listening.